There's no more existing homes for sale.
Darwin is a very interesting story. Obviously it has a very big lull period, very similar to Perth.
What are the 3 best suburbs to invest in one of Australia's hottest markets?
I'm going to ride this wave with Darwin, but I know for a fact that I'm not going to hold this asset for the next 10, 15 years, right?
Darwin is a marketplace that has had no price growth for 13 years. It is the most unique story in the Australian property market. What are the 3 best suburbs to invest in one of Australia's hottest markets? You have heard us talk about it for months now. I have said that Darwin is going to do well. It has begun doing well. And in this episode, we're going to go through 3 suburbs that you may want to look at if you are open to investing in Darwin. We're also going to touch on 5 reasons why Darwin is looking good right now. So we're going to unpack that a little bit more for you now and give you the latest and greatest information about Darwin. Adi, legend, how are you, man?
I'm good, man. This is an interesting topic. Yeah. Interesting because I'm also investing in Darwin. So
you are. You're buying in Darwin.
I'm buying in Darwin.
Adi is buying in Darwin.
Can I just frame this conversation?
This is cool, man.
I've been investing for 11 years now.
Yes.
Okay. Now I pride myself and position myself as the non-emotional investor. I will never get emotional about investing. I'll just, as long as the spreadsheet says yes, I go invest. I actually found Darwin around the same time, right? I was looking at Darwin, it started popping up in all the data metrics, and I was like, it's Darwin, come on, I met the 7 people that live there. I don't, how are they going to move them?
So I might have to edit that one out. I'm going to leave it in there because it's funny. We have had some lulls on this very podcast over the number of years. I think I still owe Darwinites, everyone. We owe Darwin a podcast. Adi's now going to come with me because he's insulted you all more than I ever did. So we will come to Darwin at some point and do a podcast in Darwin. That's still on the agenda. Let's look up a studio there one day. Let's give it a go for our on-tour episode.
We might have to take our own equipment though. Yeah. Okay, maybe that's the last one. I promise. I'm not going to say that. Okay, so Darwin, I saw it coming 6-7 months ago. I know you did. You were looking at all the macro factors. Things were changing. Listings were down. I parked it. My emotional side got the better of me. I should have really been investing there 6 months ago, like I did some of the other spots. But Darwin is a very interesting story. Obviously it has a very big lull period, very similar to Perth. Then it goes through its boom cycle, and we're sort of in that cycle now. We're starting to see the signs of it in the last 6-7 months. We spoke about the Melbourne market in the previous one, where there's going to be an uplift across the Melbourne market, regardless of how good or bad the data set might look for a particular suburb. Darwin, obviously, much smaller market. So we are going to see an uplift across the board in the next 2 years, right? There's just no doubt about it in terms of the demand that's seeing. What I wanted to do, right? I know I'm very
strong.
Well, I have to be strong because I'm buying there, so I need to convince myself here.
Can I go through some of the reasons why people are investing there at the moment?
Please,
this is a little bit of a recap. We've probably touched on it before, but let's just start with the first reason. Darwin is a pressure cooker at the moment, a complete pressure cooker where it is boiled up very, very quickly. I said a while ago that everyone's going to start looking and paying attention to Darwin because of those data factors that we talked about and the principles of what investors are looking for today, and Darwin meeting those principles. But now, 6 months later, the pressure is there. Supply listings have dropped off a cliff because in the quarter of December 2024, there was a 30% increase in the number of sales in Darwin. That level is so large that I don't think it's ever happened before in a capital city. In a single quarter, there's 30% more sales that happen from one quarter to the next. That is in aggregate, but most of that is actually made up of investor-financed data as well. Typically, there's about 250 investor sales every quarter. In the quarter of December, there were over 400. There were 420 transactions that occurred. So that's an extra 170 transactions, nearly 70-80% more than usual in a single quarter that happened for the first time in Darwin's history ever. That pressure cooker has meant that there's no more existing homes for sale. Darwin is a marketplace that has had no price growth for 13 years. That we are at the same price point as 13 years ago. You could have a teenage kid out there and Darwin house prices would be the same as when they were born. That is ridiculous. We haven't had that story anywhere. But what that means is there's a lot of people in Darwin that are sitting there being like, I have the world's crappiest property investment. I just don't want to make a loss. I want to get rid of it. That has meant that when this demand surge has happened, there's like a little bit of a glut of properties to pick up at the moment on the cheap. That glut is now over because there's been a 30% increase in a single quarter. Everyone has taken it all up and bought it. But they are still there. Artie's just mentioned it. Artie's buying there. We're buying there because we see a huge potential opportunity in the next couple of years for the demand uplift to exceed, and there's no supply coming. There's no construction activity happening in Darwin. You put all of this together, it is the most unique story in the Australian property market. It is a live case example of something that we haven't seen that much before. It is investors absolutely, completely changing an individual market by coming in at the same time, at the same spot, all together and taking everything. We've already seen that. Right now, there's been a 12% drop in new listings in the last quarter. There's been a 30% drop in the total number of listings and a 30% increase in the total amount of sales. All of these data things are complete outliers, like out here when it comes to the rest of Australia, and extremely positive, the things that you want to see. And now we're at the precipice, we're at the starting point of rapid price growth, because if people stay there just for one more quarter, just one more 3-month period, and the same thing happens, the only story that happens here is you are starting to buy properties from people who don't actually want to sell it that much and are open to selling it if you pay them. You're going to have to pay 6-figure premiums to buy that property, and that property might only cost $550. You might have to pay $650 to buy that property, and you might be willing to do it because you know that there's so many people out there trying to buy it and there's not many homes available. That is where we are right now, and Darwin house prices are going to have a massive run because of this. Are you convinced?
Wow,
convinced?
I am convinced. Gosh, maybe I'll buy 2. Gosh. I'll liquidate some shares.
That's the high level narrative. I think I covered absolutely everything. There's one more last little thing I wanted to cover is this isn't only investor boom that came out of nowhere for no reason. The reason why investors are there is because the data looks good at an economic level too. Its unemployment rate is 3.4%. It's had an increase in its gross state product as well. So activity is happening on the ground in Darwin that supports prices to be much higher than their 2013 level. If prices were at a normal level and had grown 2 or 3% every year over the last 13 years or some version of that, then prices would be okay. But we are at a price mismatch with its economy at the moment. Its economy is doing really well, everyone is employed, and prices are the same as their 2013 level. That mismatch doesn't make any sense. If everyone's employed and you're sitting at an unemployment rate that is well below your normal setting, and you have job creation and a high participation rate, everything looks pretty good. Why are prices so low at the moment? That's part of the reasoning too. And then there's the final point is it's got an extremely high yield.
There it is.
You want to take on risk? You're getting a return. You're getting a 7% yield. Like, you could get it wrong. You can get no capital growth being like, you know what? I'll just take my 7%. Happy days. It's pretty hard to get 7% across many assets now. I'll just take my 7% yield that's on offer, or 6.5%, 6% net you can possibly get in Darwin. Amazing. So the numbers are so compelling. So there's the summary of what is Darwin all about now. 6 months ago, I thought it could happen. 3 months ago, I started seeing it. And now Adi's saying it's pretty much certain that this price growth is going to happen because, it's just so obvious that this narrative is in place at the moment. Yeah. Adi, kick it off.
Can I frame this, Red? So economic level, so at the macro level looks great. We can start to see it flow into sort of the Darwin market at the suburb level as well. So micro is starting to tell that story. We obviously run a buyer's agency together, right? So can we just talk about for a couple of minutes, what kind of an investor, right, does this actually apply to? Now, I'm a seasoned investor, so I'm sitting here very comfortably telling you, yep, I'm going to ride this wave with Darwin, but I know for a fact that I'm not going to hold this asset for the next 10, 15 years, right? It's kind of not what my personal story is, right? Yes. I'm buying it to sort of take advantage of the momentum that I know is coming because I can see the data. But 2027 comes around and I'm probably like, I'm going to sell it to this other person who's going to pay me a premium for this. Who does it apply to? Is this a first-time investor kind of?
I don't think so. I think it can be, for sure. It can be. It's compelling enough and strong enough that it can be. But at the same time, a first-time investor is probably more likely to be nervous about property investing. Do you show them Darwin to begin with? It's around some of the emotion that they may have and presenting something that suits their risk profile. So it will naturally have a higher risk profile. But really, at the end of the day, if you could just follow the numbers, its risk profile is pretty good there as well. Its price point is so low, and we don't need to even put it in the it's just going to rise and then fall basket. Yes, investors are going to be there, and that is scary. But Darwin is a transient marketplace. It is a place where people go, work, and then leave. So it should be an investor-dominated sort of area, an area where people stay for 30, 40 years. Of course, there's going to be more owner-occupied centric because people want to own their own home there. If you live in an area in a transient sort of way, you think about renting. Like if I go live in Perth for a few years, I'm probably thinking I'm only going to be here for a few years. I don't need to go buy myself a nice family home here to live. I'm thinking of it in a transient way. So you're going to see more investor activity anyway. That's quite normal in an area like this. And there's the one last piece to the economic story that I like to tell people as well.
Sure.
With Darwin, you're going to get a little bit of a short-term situation for all the reasons that I talked about. But also, you're buying a chip in luck. Economic change is a little bit of a luck story as well. You're buying before economic change actually happens. But Darwin has a lot of potential for big economic movements and shifts. There's gas projects there. It's a centered economy. It's not that diversified, but those sort of projects are a little bit time sensitive. You can have a huge project that kicks in from the government that comes in or an explorer there, and that could really expand a boom out for a number of years and then drive even more attention there because people need homes there and there's no supply there as well. So if I'm investing there, I'd also be just continually watching it, and you could get lucky. You could be buying a little bit of a price mismatch at the moment. That's what I call it right now, price mismatch. And then you could get lucky because that economic improvement's there. And then it could look a bit like Townsville. Townsville is very attractive. Its economy is on fire. It's got like a lot of positive factors going for it. And it's just like, I don't know, why will I leave Townsville right now? I could be a first mover, a little bit of fear of other people, but I probably won't leave there right now because the fundamentals are still really strong with its economy. Absolutely. You could get that with Darwin in the years ahead. It's just not so obvious right now. So there's a whole range of reasons. It can suit lots of different investors. Definitely suits an investor like you because you own lots of property and you don't own anything in Darwin. You're getting a diversification piece. I'm similar. If you've got a couple of properties, it suits. But also if you want to make a quick 100K, if you're starting it out, it should be on your list of having a conversation about and being mindful of. Putting it on the list and having a conversation about. That's what I describe it as.
I like that. Yeah, I think it's buying for potential. It's obviously the data is playing out. There's an investor-led demand that's going in, basically absorbing all this little stock that's available. Like there's 3 houses for sale, but there's 20 investors lining up to buy it from you. Yes. Right? So that just by its nature, obviously prices are going to rise because there's 20 investors are going to fight each other to get one of those 3 properties, right? So that's completely that. Part of the reason that I'm excited about it is I've heard, like from grapevines, and I've done some research. There is a Greater Sunrise gas development project that's potentially in the works at the moment. There's some like negotiations happening between NT government and the Timor East. That's the luck part, right? So if that comes to fruition, just for a second, right? If that comes to fruition, so we have the investor-led demand, but then if you have this other gas, whatever,
the last few years,
oh my gosh, like there's like an influx of people descending upon, Darwin, completely changing its makeup. Yep. Where are these people going to live, right?
This is alpha beta again, actually.
Yeah,
this is a little bit of alpha beta. You're buying a change before or something that people don't see. This alpha thing is more of a question mark in Darwin. Correct. You can find a good deal. Maybe you can't anymore because there's so many people, but you can find a decent enough deal. The beta is what you're buying, like market movements that are happening. But this alpha change is like, if you do your research on this project and then find out whether it actually happens or not, I don't think anyone's got any clarity on that at all. But if it does happen, you're buying something before something's actually happened, a bit of a change that's there. But you have some knowledge that it could happen. This is what I meant by you're buying a chip in a market that has pretty low downside. It's already at 2013 prices with a 7% yield. It doesn't have downside anymore. Exactly. It's like, where will prices go? You're getting land for such a low cost and its vacancy rate is very low. So there is no downside there. I don't think prices are going to fall any further. You're buying no downside, a lot of upside potential. It's got a lot going for it in that sense.
It does. I'm excited about it. I mean, I'm mostly excited about owning a house in a suburb called Humpty.
Humpty Doo. Is this on our list? Is this on our list?
Is this on our list? That was a good segue. Hopefully that was a good segue.
I can't believe you picked it. Adi has picked his suburb to invest in. This is professional investing.
That's right.
Top level investing. He has. This is what do we call us? Like economics research led, data led. Using our brains, but. We've picked Humpty Doo as the top suburb in Darwin.
I was like, what, I can go down the smart route.
This is just for lols now.
We've spoken about, I don't even know what Humpty Doo's population is, to be honest. 4,000 apparently. So Darwin as a whole, right, is going to move, right? I have no doubt about it. So I thought to myself, why not own a house in Humpty Doo? That was the extent of my research.
I'm going to tell my 4-year-old, she's going to be like, yes, Daddy, let's move to Humpty Doo.
Humpty Doo. So... look, the data at a Darwin level is quite. You told me to.
A little anecdote before you go into this is a funny story. When I was naming my firstborn daughter, I asked my 8-year-old nephew at the time to name my daughter, and I was actually, going to give him full rights to do it. Be like, cool, I'll pick it. Like, And then he said 2 things. He said Scooby Dooby Doo, and he said Humpty Doo Doo Doo. He didn't know anything about these 2 suburbs, but he just thought they sounded funny. And then we decided, no, we have to veto that. I can't name my little Zali. I can't name my little girl Humpty Doo Doo Doo. But someone in Darwin has decided to name their suburb Humpty Doo.
That's right, exactly.
What a fun name to say.
Absolutely.
4-year-olds love this.
I'm going to go broad.
Why are we investing here?
Look, Humpty Doo... It's not really a Humpty Doo story. I mean, obviously, I'm having fun here. I wanted to pick something that has I thought it was a funny name, right? So it's the fact that the Palmerston City, the Darwin City markets, are seeing such an incredible increase in demand, right? So really, all ships will rise with this, whatever the tide. I completely messed up that particular anecdote. Whatever it's called, it's going to rise, right? So some of the markets that I've picked here, there's Jingili, there's Humpty Doo, there's Wanguri. There's Zicoli, there's Grey. It's a more affordable part of...
all these in Palmerston?
No, so some of these... So Humpty Doo is in the Darwin city.
Yes.
Or Litchfield municipality. God, I can't say that word. It's a terrible word to say.
Word, yes.
It's a really tricky word.
Looks far from Darwin. This one.
Darwin is Wanguri, right next to the Darwin airport. Yep. There's Jingili as well, which is part of the Darwin, I'm not going to say that word, NT. So... It's my sort of take on the Darwin market. Like when I sort of zoom out of Darwin, there's like a handful of suburbs, really, right?
Yeah, there's not many. Yeah,
there's not a lot. There's not a lot of suburbs to choose from. We're not talking about a Melbourne, right? There's options to pick up 550K properties with a 6.5-7% yield, 800 square meter block. We saw a deal yesterday, right? 449,000, 800 square meter block in the suburb of Grey. Yep. It's just and. I think the story of that particular purchase from your client was they had to beat out other investors and buyers agents to get there, right? So we can see this playing out, right? These markets they're already starting to outbid each other. So I have picked Jingili, Humpty Doo, and Wanguri, but the
any of them will do.
Any of them will do, right? Any of them will do. There's Grey, Zicoli, or Durack is another one.
Yes.
All of these markets and. The common sense investing style that we have a framework, right? We talked about in the 3 best and 3 worst Melbourne markets that don't go into areas that have too many investors or that don't go into areas that have too many of this. Darwin is a different dynamic, guys. So you have to think of it differently. This is why I asked you the question. Does it apply to everyone? Because you have to come in with a certain level of mindset when it comes to this kind of a market because it doesn't look like anything else in Australia. Yeah, there are way more investors. Most of these suburbs have 50% investors, right? For sure. But that's not, I'm sitting here not contradicting myself, but telling you that, hey, it is a different way to look at it. And you are buying potential. You're obviously taking advantage of, buyers agents trying to outbid each other, for their clients. But you're also taking advantage of the potential that happens with some of these infrastructure projects that are in train.
With Darwin, I might add in an additional lens that I might put into my framework. So I'd put 2 Darwin investors. So you asked me who should invest in Darwin, and it's now quite broad.
Yes.
You want to make a quick 100K, you want to take on a little bit of risk. Yep. You don't have Darwin in your portfolio, which I think is everybody. They don't have Darwin in their portfolio, and you're a property investor. There's a big group of people who want to have a consideration of it, and it's worth thinking about at the moment. The type of property that you buy, Darwin has a few factors to think about as well. So there's the element of if I'm buying a really poor quality property because it exhibits a lot of great investment fundamentals. Like it's a little bit run down. It could be on a big block, but the block's not tidy, and it's just not the nicest home to invest in. In somewhere like Melbourne or in other places, I'm like, this is great.
Yeah.
Like, this is exactly what I'm looking for. I can add lots of value. With Darwin specifically, because it is a transient market that is family oriented, that is a little bit higher risk as well. I think these properties will do the best. They typically always do. The hallmarks of these sort of investments do pretty well, as long as it's livable and decent enough for a family to be there. But at the same time, if I'm investing in Darwin, I might want an additional layer of protection or two. I'm okay with the general story with Darwin. It's got that potential. I'm buying a lot. I might be willing to trade off a little bit there and be like, look, I don't need the full growth story, but I need a bit more security.
Yes.
I need security because I'm buying in a market that has, 150,000 people. Like what's Darwin's population? It's pretty small, right? So it's between 100 150. I'm buying in a market that's really far away that I don't know, that's very transient, that's very investor-centric, that hasn't grown for 15 years. Like, man, there's high risk factors associated with this. Because I'm buying in that area, what I need my yield.
Yes.
If I get my yield, I'm safe because I'm getting my 6-7% yield. I'm covered.
Yep.
I don't need any capital growth. I'm getting 6 or 7% yield. Like, I'm covered. My return is actually inbuilt automatically from that yield. So how do I protect myself to get that yield? Certainly over time. I buy a type of property that doesn't have any risk associated with it because it'll be the first 5% or the first 10% of properties that get rented out, because Darwin is an area where everyone's got a lot of cash. The incomes in Darwin are higher than the people in Vaucluse. In friggin' Rose Bay. It's Rose Bay and Darwinites that are competing for the richest people in Australia, right?
Wild.
The reason for that is because it's associated with high, like it's the sectors of the economy there. It is concentrated, and everyone that goes there is like earning a really high income, or they get the hell out. They're like, nah, I'm unemployed, so I'm not staying in Darwin. I'm out of here, right? So then, because of some of the crime issues there, and it is the crime capital of Australia, I put that in a different episode, one of the crime capitals of Australia, I'm probably actually changing my framework of how I'm buying. Maybe if I'm really sophisticated, I'm buying the $450,000 home that looks like crap and on a big block. If I'm really sophisticated, I'm doing that. If I'm you, I'm doing that. I'm open to that. But if I'm most people and I'm investing down, I'm actually sticking to markets like Lions. I think Tiwi has that as well. I'm spending this is if you've got the budget. I'm spending a bit more, but I'm spending a bit more on safety. I'm spending a little bit more on securing my yield for long term. I'm spending a bit more on getting a nicer home that is protected against like crime and all those areas. I'm buying safety a little bit and I'm trading off a little bit of capital growth. I think that conversation makes a bit more sense in Darwin, given the unique frameworks of Darwin. So that's how I'd be looking at it. And speaking to a lot of locals there through the last few months in our research pieces of Darwin, they've often said that to me, that like, I've been here for a really long time. Like, if you go to some of these suburbs, these are nice. All the families want to live there. That protects me a little bit. But if you want to take on a little bit more yield and return, you can go to the older established suburbs, but they come in with a little bit more risk. Like, crime is more of an issue in these areas than in those areas. So that's something to be mindful of, depending on the type of conversations that we have. But in saying that, a lot of the people that we're speaking to, they have a $500,000 or $600,000 budget in Darwin. But if you have a $750,000 budget in Darwin, then I'd be being like, look, it's okay. Take less capital growth, but over a 10, 20-year period, you don't have to sell out. There is no exit here. You can just own this as a long-term investment for you. So that's something to be mindful of.
That's really good. And, this is what I like about the frameworks that we've got at a layer property, because we sort of think about it at such an individual person's level, right? It is very prevalent in the buyer's agency community now that you sort of, you're buying in a particular market, and any investor, regardless of what their profile looks like, gets...
You just give it to them.
You just give them a stock, right?
Size,
Again, and then it's a size problem, right? And then in 3 years' time, obviously the market has risen, and you tell the good news story of how much you've made your clients, right?
Yes.
But what you just spoke about, what I love about that is such a individual sort of view. You're sort of taking the profile of, I can think of, we've both spoken to one of our clients, recently. We've spoken to her about Darwin, right? And factoring in her budget and her risk profile, I can almost immediately say, yeah, it's probably better for her to go to the more affordable pockets, because it's a higher risk for her, but it sort of works because she needs the higher capital growth to be able to get to where she needs to be.
Yeah, or it's all she could afford.
Or
There's that element, right?
maybe, and
this
that,
is
it's as
expensive.
simple as
Darwin's
that.
not a cheap city. So
No, it's not. No, it's not. Yeah, exactly. 13 years ago, it was quite an expensive place, right?
It was topping Sydney.
That's
and
right,
Perth as like Australia's most, like it was one of the highest median price points
Exactly.
at a particular point in time,
Yeah.
post a boom in gas that they had.
That's right. And that's what I like about that framework, right? You're sort of thinking about it at an individual investor level.
Yes.
And I think that's what sort of sets us apart a little bit. It just gives us a little bit of an advantage in the market because
sure.
if you do happen to have a conversation with me or read them as part of like our layer property sort of discovery calls, one of the things you'll notice between us is we do sort of refer to you very individually. It's not like, hey, you're buying in this market because we're buying in this market. It's like, hey, potentially this market might make sense for you, but we need to find you the right asset based on the conversations that we have with you. So I just wanted to put that in there because I know there's a prevalence in this industry of like just matching people with like different assets because it's just that's the easy thing to do.
Sure.
So
And can I segue for a minute to our audience who've been listening with us for such a long time now? Firstly, thank you so much. The support has been absolutely amazing, and it is so kind that on the YouTube comments there'll be some douchebag at the end of this video be like, "This guy, I don't like his earrings." Stuff you. That's a mean thing to say, by the way.
Yeah.
There's going to be things.
I bought this from eBay, by the way, so I don't know what the problem is.
There's always going to be some douchebags out there, but now it is so great because there's a community of you following us, sharing us, backing us up as well. It is kind, so that is very, very nice of you. But also on top of that, like we have put in a couple of our requests in our previous episodes of like a liar hiring, and now you got a freaking big ass team already. Like you've got Confidence Finance's growth of like 10 years done inside 3 months. Pretty amazing.
Thank you.
You are supported by a group of talented individuals now that are helping secure assets for your clients, which is very, very cool there. And also at Flint Invest, we have been hiring a lot. We're still looking for wonderful people, especially in the mortgage broking space. So if you're a mortgage broker or you work at a bank and you would like an opportunity to work with me and our team at Flint, be one of Australia's largest mortgage brokers, if not Australia's largest independent mortgage broker, by the end of the year, we will be that large. You want the chance to work with us, I would absolutely love to hear from you, especially if you work at a bank or an existing mortgage broking business. Sorry, everyone, I'm poaching right in front of you here right now. You work at a mortgage broker because you want to work for us instead. Like, I'm pretty cool, and I'll back you up even if you have weird earrings and people pay you out, back you up publicly. You can come join us. Would love to hear from you. You can jump on info@flintgroup.au or jobs@flintgroup.au and just send us your CV and I'll take a look at it.
Beautiful. Love that plug.
Yeah,
I don't need any more people for the time being, but
yes.
But I appreciate I've had probably 10 in the last 2 weeks of people reaching out and be like, hey, we'd love to have someone even asked me to mentor them. I was like, wow, I can barely mentor myself. So maybe. So I appreciate the vote of confidence. I appreciate it. But that was cool.
It's amazing. So we'll leave it there. Darwin, a whole bunch of suburbs to look at. We went through exactly why it looks good. It's a rolling update of Darwin. It is the most interesting property market in Australia. It's a live case study of an interesting change that's happened in our marketplace that we've been talking about for a period of time, but it is an attractive option for you to think about.